Computer admin on. Welcome, everybody. Thank you guys so much for joining us for our Dream for All Homebuyers workshop, hosted in partnership with the Realtist of Fresno County and our partners over at CalFHA. We're going to get ready to get started in just a moment. So just give us a moment. We also would like for you guys to keep your mics on mute. We are going to hold questions and answers at the end of the presentation. And if for whatever reason we can't get to your questions, we'll be sure to follow up in an email with those answers so that you guys have the answers to your questions. All right, so let's go ahead and get started. Thank you again for joining us for our Dream for All Homebuyer Workshop. I'm going to go ahead and hand this off over to our chaplain, Mitch Shaw, who is going to open us up in prayer.
Good evening. Thanks, everybody, for being here. God, we thank you for another opportunity, another day. We thank you for new mercies today, God. I thank you for this time together and all the information that's going to pass back and forth tonight, God. I pray, God, that you would make connections that would change lives, God. That be it home ownership or whatever it is, information exchange, God, we need you tonight, Father. I pray, God, for the people that are on this call, God, that are just dealing with life. We speak against mental illnesses right now, physical illnesses, grief, just anything that we're going through, God. We know you to be greater than them all. So thank you for all that's going to transpire tonight. We love you and praise you in the name of your son, Jesus. Amen.
Amen. Thank you so much for that. It's always nice to start in prayer to set the tone off right. So let's go ahead and get started. Thank you again, Chaplain Mitch. Realtors of Fresno County, our mission, we have an initiative that is going where we'd like to educate our community and to be a resource to you all. So our initiative is designed with a high level of comprehensive home buyer education and counseling, financial literacy, first-time home buyer workshops, down payment assistance programs, grants, flexible mortgage programs for communities of Greater Fresno and beyond. Our program for the communities. The purpose of this innovative initiative is designed to increase the home ownership rate for low to moderate income in Fresno for the Fresno buyers. So let's share a little bit more with you about the awesome organization that helped put this together. So our team, our Realtist team, and we are lucky to have some of our Realtist team members on this call today. So I would love for you to introduce yourselves. Go ahead, Lionel.
Hi, my name is Lionel Jacoby, and I'm a long-lasting member of ROFC, and I'm very eager to be here today and just get absorb some information. Obviously, as Aisha mentioned, our role is to provide education to our community and assist you guys in any ways we can. So it's always a pleasure to be a part and participate in any way that I can and support this wonderful organization. So let's get some learning going.
Thank you.
Awesome. My name's Mitch Shaw. As you guys heard earlier, I'm the chaplain. I'm really excited to be a part of the Realtist team and just looking forward again to all the information that's going to be exchanged tonight. Welcome, welcome, welcome.
Hello, I'm Annette De Dios. I am the Vice President of ROFC. Love being a part of the organization and happy you guys all join us tonight.
Hi, I'm Denise Ogata. I'm the second secretary, and this has just been a great organization to be involved in and educating our members and the community.
Awesome. And my name is Aisha Allen. I'm your Realtors of Fresno County 2026 president. So yeah, let's continue on with our program so we can get you that great information. We can't do this without our partners. There's some great folks who support us in our endeavors and our initiative, and that includes City of Fresno, Realtors of Fresno County, the organization putting this on, Tri-County Bank, and Self-Help Enterprises. We also have our event partners who are joining us today. which include Nexa Mortgage, Tri-County Bank, and Cal HFA. So we're gonna go ahead and get you guys the good information that you are all here to get about the Dream for All program and a few other programs that we also will be sharing with you today. So I'm gonna go ahead and hand it over to the wonderful Natasha Dowdy.
Thank you, Aisha. That was a beautiful and warm welcome. I am going to share my screen. Thank you. Can you see my screen?
Yep, perfect.
Okay, perfect. You never know. You never know if you can see the screen. Well, thank you guys all for coming out or not coming out, but thank you for joining us this evening. My name is Natasha Dowdy, and I am with the California Housing Finance Agency, also known as CalHFA. I am the lender training program analyst at CalHFA, and I often go out to do outreach events to educate homebuyers, lenders, realtors on the various programs that we offer today. And I am so happy and glad to be here to help educate you on Dream for All. I will give a quick update or give a summary update on the standard programs that we offer. But first, I'd like to address that elephant in the room and cover CalHFA's Dream for All program. But let me tell you a little bit about CalHFA for those of you that are new. Maybe you've never heard of CalHFA. Well, CalHFA, we are a state agency that was founded in 1975. So that's 50 years of serving the state of California. We are committed to offering affordable housing financing options for low to moderate income families. We offer down payment assistance, closing cost assistance, and recently we also offer refinance programs. So if you are someone that's interested in any of these programs, it's best to contact or work with a CalHFA approved lender because our goal is to see all families living in homes that they can afford.
Can
But
I ask a question? I'm sorry. Do
sure.
you provide the like after attending this workshop, do you provide a down payment assistance certificate, or is there any, because I know that there are videos like this and you do get down payment assistance.
No, unfortunately, CalHFA, we don't host those trainings where you would get the home buyer education certificate, but I can show you during this training where you can actually sign up to take a class to get the certificate. So hopefully you stay tuned.
Okay.
Okay.
Perfect. And we'll also be answering all of your questions that you have for our presenters today. If you want, please and put your questions into the chat where we can monitor those questions and answer them as they come. And for the ones we can't monitor, we'll have them answer the questions at the end. Also, if for whatever reason we can't get to your question on this call, we will be sure to send that information to our presenters so that they can answer those questions and we'll send out an email to you with that follow-up.
Perfect. Thank you. So, I'd like to start off with Dream for All because a lot of folks they hear the buzz of this wonderful Dream for All program, and I'm just going to start with that program first and address the elephant in the room. So, as I get my clicker. Sorry, guys, a little technical difficulty here. So, Dream for All, the Dream for All Shared Appreciation Loan Program. I'm going to give you a quick overview of what this program is and the details about it. So, Dream for All the Dream for All was designed to help first generation home buyers. So the state budget allotted money to go towards the Dream for All program. So there's limited funding available on this program. So please keep that in mind. We do have other programs where funding is always available, but the Dream for All Shared Appreciation Loan Program was designed to target first generation home buyers. So there's unique requirements on this program, but it offers a home buyer up to 20% for down payment and closing costs, up to $150,000 to buy your first home. And that much assistance makes this program so attractive because it's making that mortgage payment more affordable. And in some cases, putting 20% down, if you apply it all towards a down payment, you can have that mortgage insurance removed from your loan. And that's what's making that mortgage payment more affordable. Now, when you're utilizing the Dream for All program, it must be paired with a Dream for All conventional 30-year fixed mortgage. And when I highlight that it's a 30-year fixed conventional mortgage, I want you to keep in mind that your credit score matters. So the higher your credit score, the chances are that you'll be able to get into this program and the better off because of the max debt to income threshold. And we'll talk about that a little later. But it is paired with a conventional 30-year fixed mortgage. And remember, I mentioned that the program has limited funding available. So not every applicant that registers for the program will be selected. So it's going to be a random selection to determine who's selected for the program. So keep that in mind. The portal opened February 24th. So that was just a few days ago. So now is the time, if you're interested in this program, now is the time to contact a lender to get the Dream for All pre-approval letter because you'll need to take that letter and go to our website and register for the program. But I'm going to break it down, give you the steps on what steps and what documents are needed to register on the portal. But first, I want to highlight the requirements of this program. We require all borrowers on the loan to meet our definition of a first-time homebuyer. And I don't want you to get that confused with what a first-time homebuyer is and what a first-generation homebuyer is, because those are two different meanings. A a first time home buyer, we're only looking back at the last 3 years of you owning a home. So our definition of a first time home buyer is no ownership interest in your primary residence within the last 3 years. Dream for All does require that one borrower on the loan currently live in California and one borrower on the loan meet our definition of a first generation home buyer. And we're getting so many questions around that definition of a first generation home buyer, and I'm here to explain it to you. Now, this is one borrower on the loan that has to meet these requirements. That one home buyer can't own a home or be on title to a property in the United States within the last 7 years. So that's one home buyer that can't own a home in the last 7 years. And their parents, both biological mother and father, can't have a present ownership interest in a home located in the United States. So if you have a parent that maybe owned a home last year and they sold it and they no longer own that home today, you're a first generation home buyer as long as that home buyer hasn't owned in the last 7 years. Now, we do care whether or not if the parents own the home at time of death. So keep that in mind. So if you have a parent that's no longer living, we care whether or not they owned a home at time of death. If they did own a home at time of death, that would cancel you out from being a first generation home buyer. But don't worry, there are other programs available to help you obtain home ownership. Now, if you are someone that was placed in foster care or institutional care and you have proof, maybe you stayed a weekend or a month or a year in foster care, you don't have to answer questions about your parents. As long as you haven't owned a home in the last 7 years, You are a first generation home buyer. So if you have any questions about this definition of a first generation home buyer, please type them in the chat and we'll get to your questions. And if you're confused, please don't self-eliminate yourself. Talk to a lender and explain your scenario, and they'll see about structuring that loan to make sure that it's in compliance. But with anything that I'm telling you, please do not self-eliminate yourself. Contact a lender. We have a mortgage broker here on the line. It's up to you on who you want to work with. Now, before I get into how the Dream for All Shared Appreciation Loan Program works, I want to explain to you the difference between equity and the difference between appreciation. Now, equity, because some lenders, some people on social media, they may refer to this Dream for All program as the shared equity program, and that's not true. It's the Dream for All Shared Appreciation Loan Program. Now, equity is the difference between the amount you owe on your home and the current market value. And factors that would increase your equity, because that's what we want to do. We want equity, right? Factors that will increase your equity as a homeowner is as you pay down the mortgages on your loan. So when you go out and you buy a home, 9 times out of 10, you're going to take out a loan to buy that home. As you're making monthly payments and you're paying down that loan, you're building equity. As the property values increase, you're building equity. Now, appreciation has a different meaning. Appreciation is the difference between the original purchase price of your home and the current market value when you decide to go sell your property. Factors that can increase your home's appreciation would be market demand and trends, what's going on in the market. Is there a demand for homes? Renovation and upgrades. Did you buy a home and update it or make renovations? Did you add on an ADU to your property? Did you do a kitchen remodel? Those are factors that can increase your home's appreciation, or neighborhood characteristics. Is it a high crime area? Those are things to consider. Now, please keep in mind that the Dream for All Shared Appreciation Loan Program, it is a loan. It's not a grant and it's not forgivable. It is a loan that you will have to pay back when you decide to sell your home, if you decide to refinance, or in 30 years, you will have to repay the loan plus a share of your home's increased value, part of that appreciation that I mentioned. Now, CalHFA will grant you an exception. CalHFA understands that that shared appreciation and that loan, that's 20% of your purchase price that you took out. Uh, that's a large sum. We will allow borrowers to refinance one time without requiring immediate repayment of the shared appreciation loan when you have made 12 on-time mortgage payments on this program. So keep that in mind. Now, I know that's a lot. Don't worry. There's specialized training that you'll take to help you understand this program. Now, how does it work? Because we're offering 20% of the purchase price up to $150,000. What does that look like? So here's a quick example of someone buying a home for $500,000 and they took 20% of the purchase price and they used that $100,000 here all as a down payment. You can split it up. You could say, hey, I'm going to take 15% and apply that to my down payment and use 5% to help me with closing costs. So that is an option. But in this scenario, we took the full 20% and applied it all as a down payment. And that will give you a loan amount on your first of a $400,000 loan amount. Now, that $100,000, that's a silent second on your home. You do not have to make monthly payments. There's no interest accruing on the loan, but it is a loan that you will eventually have to pay back. You can make monthly payments if you decide, but while you're in that home, let's say you're in the home for 5 years and you then decide to sell your property. You do not have to sell in 5 years, but you have an option to sell your property 5 years later. Let's say 5 years later, you decide to sell your home for $700,000. We are then going to take the appreciation amount. So that remember, I stated that the appreciation is the difference between what you originally bought your home for and the amount that you sold your home, the current market value. And then this scenario, the home appreciated by $200,000. So we're going to take 20% of that appreciation, which totals $40,000. Remember, you will always owe the original loan amount. So in total, that's $140,000 that will be owed to CalHFA. Now, assuming that you've been making on-time mortgage payments for that 5 year span, you would have paid down that original balance that started out at $400,000 and you paid it down here to $370,000. You, in essence, would walk away with $190,000 in equity. So keep that in mind. That does not include listing fees, any fees associated with selling your home, but that's a rough idea of how much equity you as the homeowner could walk away with if the home was sold for $700,000 over 5 years. Now, I want to just stop here because I know that there are a lot of people on the call that may be renting, and I just want to throw out some numbers here. I always start with $2,500, but if you're currently renting and maybe your rent is $2,500 and you're paying that monthly, over 12 months, that's $30,000 that you've paid to your landlord. Now, let's assume that your landlord keeps your rent the same at $2,500. Over 5 years, that's $150,000 that you would pay to your landlord over that span. And what you're doing in that case is you're helping your landlord pay down their mortgage and build equity in their home. So just keep that in mind. Now this program isn't right for everyone, but I don't want you to think that you have to memorize this and understand it. There is, again, a specialized training for this program that you will have to complete. But this is just an idea of how the program actually works. Now, as I mentioned, the portal is open today, you guys. It's open right now. And what you need to do is contact a lender and get this Dream for All pre-approval letter completed by the lender. They do have to sign it. You need to gather that letter right now, today. And you need to gather your government ID. That could be your passport, driver's license, state ID, military ID. These are all the documents that you need to gather and have ready to upload and enter into the Dream for All application portal. If you were ever placed in foster care, you will need to upload proof of your foster care documentation. If you are the first generation home buyer, you will have to enter your parents' full name, date of birth, current address, and date of death. And that's both parents, both mother and father, that you'll have to enter their information in if you are the first generation home buyer. I say gather your birth certificate just in case. If for whatever reason you're missing your parents' current address, you will need to upload your birth certificate providing proof of parent relationship. I say gather it just in case because once the portal closes March 16th, 2026 at 5 p.m., there will be a random selection, and those that are selected for the program will be audited. And if your parent has a similar name to someone else out in the world, we may need additional documentation. So I say gather that additional documentation now just to be prepared if we have to request additional documentation from you. Now, here is an example of the voucher portal. What you're going to do is go to our website and you're going to click on Dream for All portal. It's going to take you to this section And the portal you have access to by clicking on this box here. It's highlighted now because it's open. So again, you guys, don't wait till the last minute. Contact a lender to get pre-approved now, to get that Dream for All pre-approval letter so that you have all your ducks in a row and you're uploading it to the system. Now, there are four statuses that you could potentially receive when after you register for this program. The first status would be additional documentation needed. Basically, something that you provided isn't clear and we need additional documentation from you. Or not selected. Not selected basically means you weren't selected for the program and you should contact a lender to explore other programs that are available. Waitlisted. Waitlisted is definitely a status that some can receive. And basically, what that means is you're on a wait list and you're waiting for a voucher to become available or more money to be allocated to the program. And the last status is selected. And selected means you're selected for the program and you have a voucher. So that voucher is good for 90 days. What does that mean? As soon as you get the voucher selection status, you should automatically contact your lender, contact a realtor or a realtist, and start a game plan because you have 90 days to find a home, get your offer accepted, and have a CalHFA approved lender reserve your loan in our system. You guys, it is imperative that once you get selected, that you do not wait. Time is of essence, and in some areas there could be issues finding a property. So you just want to make sure that you use your time wisely. Also, keep your user ID and password. We hope to have selection statuses made sometime second quarter. Nothing has been announced yet, but please stay tuned. Sign up for email alerts. We have a lot. I'm anticipating a lot of demand for this program, a lot of registrants. So give us time and be patient. But anytime between second and third quarter, we'll make that announcement for who was actually selected or waitlisted for the program. Also, I want to add one voucher per household, you guys. Please do not try to submit multiple applications to try to increase your chances of getting selected for the program because you will self-eliminate yourself from the process. So it's one voucher per household, one voucher per physical address. So keep that in mind. And always enter the information in the system true and accurate. You don't want to fudge or fudge the system because that'll only make things worse. So Dream for All has specific income limits. It has a little lower income limits than what our standard programs offer. And our income limits are based off of the county you're looking to buy your home in. And the lender is going to use the credit qualifying income to determine if you're within the county's income limit. So the lenders, they have a special formula depending on the type of income you receive to determine which county, if you're over the income limit. So please don't self-eliminate yourself either by looking at the income chart. Talk to the lender because they're going to look at your specific income and see if you qualify. Minimum credit score, 680 for standard borrowers. I am hearing that lenders really need to have a higher credit score. So yes, my PowerPoint says that we will go down to 660, but guys, the lender has to run your information through an automated underwriting system. And depending on your profile or just the characteristics of your loan, it can not give you an approval. So the higher the credit score, the better. I can't stress enough just to manage your credit. That is so key. And please, throughout this process, avoid taking out an auto loan because that can impact how much you qualify for when you're buying a home. I say buy your home first, wait on that auto. Um, Low-income borrowers will get a break on how much they have to share in their appreciation. So if you're identified as a low-income borrower, if you borrow 20% from Dream for All, when it's time to pay us back, you'll pay back the original loan amount, but instead of paying back 20%, you'll only have to pay 15%. So keep that in mind. Dream for All does require 2 homebuyer education courses. Now, this is where you guys got to pay attention. So a lot of people are signing up, taking the home buyer education course, that 8-hour course, the Dream for All course. It's not required to register for the portal. So keep that in mind. And each certificate that you complete is only valid for 1 year. And this can be a process. So I wouldn't take it right now. I would wait. Now, you can take the Dream for All course. It's free of charge, but it's not required. If you're wanting to learn more about that shared appreciation, you can certainly take the Dream for All education course now, but it's not required. Okay, so when it is time to take the home buyer education course, make sure you're using the links on our website. This is what our website looks like. You're going to go to calhfa.ca.gov. You're going to click on the home buyers link. You're going to go to step 3, and there that section houses all the links available that we will accept for home buyer education. So I want to go over a few FAQs, and I know I think I've talked a lot. I don't know how time is going. So I want to go over a few FAQs, and I'm going to speed this up a little quickly. Um, can the borrower purchase a new construction home? And yes, you can. Um, when you get your voucher, you have 90 days to find a home. When the lender goes to reserve your loan, a new construction home can sit in a floating unlocked status for 120 days. So yes, you can purchase a new construction home. What happens if the home declines in value? Then there's no shared appreciation, but you'll always owe that loan amount. So keep that in mind. Can other non-CalHFA down payment assistance programs or grants be combined with the Dream for All program? And yes, as long as our loans, our liens, take a priority lien position on title, yes, you can combine other Fannie Mae Community Second programs with our loans. Oh no, more FAQs. Sorry, guys. Does the Dream for All program allow rate buydowns? And yes, temporary and permanent rate buydowns are allowed on the Dream for All program. Is there a maximum amount a borrower can contribute towards the down payment? I think this is like the number one question that I get on the daily. And yes, a borrower can bring in their own money to apply as a down payment. It's the responsibility of the lender to ensure that the combined loan to value stay between 95% CLTV and with a maximum of 105% CLTV. So keep that in mind. That might have been a lot. But you guys, the Dream for All program, it is available, ready for you guys to register. Please do not self-eliminate yourself. Talk to a lender to see where you stand. The next programs that I'm going to go through, they're always available. There's no first generation home buyer requirement, and you do not have to worry about sharing your home's appreciation. It's just a small amount of interest accruing on the next few loans that I'm going to slightly cover. So that's our My Home Assistance program. I think this is our tried and true program. It's always reliable. You can use this program with a conventional loan, a FHA loan, a VA loan, or a USDA loan. Here's an example of how much assistance it can offer with a $600,000 purchase price. That's $21,000 to help you with closing costs or down payment. It does offer a small amount of interest, and that interest accrues annually, so it does not compound. It's at 1%. I don't know any loan right now that's offering assistance at a 1% simple interest rate. No monthly payments, you guys. You do not have to make a payment, but it is a loan that you will have to pay back at refi, sell, or in 30 years. The next program is our Cal Plus Zip program. It offers built-in closing cost assistance, and you also get My Home Assistance. So it offers 3 liens to help you get your foot in the door to home ownership. But these are all loans that you will have to pay back. When you pair the My Home and Zip program together under Cal Plus Zip, you get about $17,000 to help with closing costs, and you'll see My Home Assistance that's there to help with that down payment. That third lien zip has zero interest accruing, so it's there to help you fit your needs. Now, our next program is the Cal Plus Access program. And this is a newer program of ours. It also comes with a total of 3 liens. You can use the assistance all for down payment or for closing costs. You have a bit of flexibility. And here's an example of it offering you about $35,000 for a down payment and to help you get your foot in the door to home ownership. So in essence, that's about 5% down. So keep that in mind. And this is available on both a conventional or FHA loan. Our income limits for those programs that I just covered, they're a lot higher. So it's just based off of the county that you're looking to buy your home. And our credit score requirement, we could go down as low as a 640 credit score. And with the programs that I recently covered, you only have to complete one 8-hour homebuyer education course. Now, if you're ready to buy a home today, look at those programs. Look at either My Home, Cal Plus Access, or Cal Plus Zip, because on those programs, you can fund on your loan in 30 days or less using those programs. So just keep that in mind. I'm going to close it out. I think I talked and babbled enough. You see my contact information here on the screen. Again, I'm Natasha Dowdy, and I am one of the lender training program analysts at CalHFA. If you have any questions, please reach out. I do encourage you guys to visit our website and sign up for email alerts. That way you stay connected with any new changes, any new program announcements. Also, if you are wanting to register for the Dream for All portal, there is that link there. It's the Dream for All portal, and it'll take you to that section of our website to get you started with the process. But thank you so much for joining us. Thank you.
Thank you so much, Natasha. And we have some great questions in the chat that I know
Okay.
that we'll be getting to.
Okay.
So if you want to answer some of those in type while we continue on with the program, feel free to. If not, we'll come back to you at the end of the rest of the.
Yes, I'll type some answers in the chat and we'll try to answer a few if we have time.
Awesome. Beautiful.
Okay. Thank you.
So if you want to go ahead and share, we're going to hand the floor over to Joshua Hodges with Nexa Mortgage.
Well, awesome and good evening, everybody. Thank you, Natasha, for that great information. And thank you, Realtist of Fresno County, for having me today. So I'm going to be quick. I'm not training today. I'm just here to essentially introduce myself and let you know. Let me go ahead and enter present mode here. Okay, are we still good? You can see my screen?
Perfect.
Okay, great. So again, my name is Josh Hodges. I'm with Nexa Mortgage, and I'm here to introduce myself and let you know that I am a lender that's available to help you get pre-approved so that you can start, so that you can enter the lottery for the Dream for All program. So I'm not affiliated with Cal HFA myself. However, I, as a mortgage broker, I am able to help shop over 260 banks to help you find a lender that makes the most sense. And plenty of the lenders that I am able to collaborate with do the Dream for All program. So that's who I am. I really wanted to just share a testimony of one of the buyers that I worked with during the last round of the Dream for All program. And it just felt like it was like a home run. It was like the definition of what you want to happen when you're working with somebody that has a voucher for the Dream for All program. So for this particular borrower, she not only put 0% down for her down payment, but at closing, this is a real screenshot from her closing disclosure. At closing, she actually got a little bit of money back at closing. So, as Natasha had mentioned, with the Dream for All program, you can borrow up to 20% for your down payment, but it doesn't all have to go to your down payment. So, you have your down payment, but you also have closing costs. This particular borrower, she decided to use some of those funds for her down payment and she used some funds for her closing costs. And we were able to obtain a little bit of seller credit as well. So all of those things combined resulted in her actually getting a check back at closing. So there's this myth that there's this myth in the home buying world that you have to have 20% for your down payment or you have to have tons of money. Yes, the more money that you have, the easier your home buying process might be, but it's not necessary to have tons and tons of money when you're purchasing a home for your down payment. Enter down payment assistance, as you guys have heard. There's plenty of down payment assistance programs in Cal HFA, the Dream for All program, the My Home program. There's plenty of other programs outside of Cal HFA as well that will be able to work with borrowers to provide that down payment for the borrower as well. So in this example, I want to get to this example. The purchase price was 330,000. And typically, when you're not using a down payment assistance program, the minimum amount that you can put down for your down payment, unless you're a VA borrower, is 3%. And 3% of 330,000 is $9,900. So typically, if she wasn't using a down payment assistance program, she'd be looking at put down $9,900. Instead, she took advantage of the CalFHA Dream for All program, and this helped her by taking care of that down payment that she was required. So as you guys had learned from Natasha, it's a program that is designed to assist first time and first generation home buyers as well. A little bit more about the details. The purchase price was 330,000. This particular borrower, she decided to use 19% of it for her down payment, and she left 1% to go towards her closing costs. So that did mean that since she didn't put down 20% for her down payment, she did have mortgage insurance. But since she had put so much money down and she had a good credit score as well, her mortgage insurance payment was only $26. So it was really affordable for her. It just made the most sense to do this. So as you can see here, she did pay for her. It says closing costs paid before closing. She did pay for her appraisal. She put her earnest money deposit. You're still gonna have to put an earnest money deposit down. So her earnest money deposit was $3,300. We got enough seller credit to cover most of the rest of her closing costs. And at the very end, she ended up getting a check back for $1,159. So the math turns out, when you do the math, she ended up coming out of pocket approximately $2,700, right around $2,700. So with the down payment assistance programs, with most down payment assistance programs, it will take care of your down payment for you, but you will still have to take care and focus on your closing costs. And I did see a question in the chat earlier that was asking, how much of it goes towards your down payment. So the entire amount can go towards your down payment, but then on the other side, we still have to take care of the closing costs. So that's where if you work with the right lender and the right agent, and they have the strategy, a great strategy ahead of time, you can really really to work to lower that out-of-pocket cost as much as possible. And that's what we did in this instance. So I'm gonna zoom out for a second, not just not just Cal HFA, not just the Dream for All program, just down payment assistance programs in general, because there's tons and tons of down payment assistance programs in general. So in general, most down payment assistance programs are designed to assist first-time buyers with their down payment costs. Some don't require you to be a first-time home buyer, and some, like CalHFA, will also help with your closing costs. Most down payment assistance programs will come in a few different forms. They'll come in the form of second mortgage payments. So you have your regular mortgage payment, and then on top of that, you have a separate payment that goes directly towards your down payment assistance portion, most, not the Dream for All program. They might also look like forgivable loans, where if you keep that loan for X amount of time, say for 2 or 3 years, that down payment assistance portion becomes forgivable. You might have deferred second mortgage loans, like the Dream for All program, which is deferred, meaning there's no payments on it, but you will have to pay it back at some point. And then there's also down payment assistance programs that come in the form of grants as well. So they might require income limits, and most will have, well, all of them will have certain minimum credit score requirements as well. The Dream for All program, it's 680. It's 680 and higher is best. It does go down to 660 if you make under a certain amount of money. And then most most down payment assistance programs will require you to have a 640 and higher. I do have access to down payment assistance programs that you can have as low of a 600 FICO. However, they might not be as good of programs as you might have access to if you are over 640. So that's just a quick little overview of I just wanted to give my testimony about this particular client that did use the Dream for All program. I am a lender that's able to help you get pre-approved so that you can enter the lottery for the Dream for All program. But if for whatever reason the Dream for All program specifically does not work out, I also do have access to tons of other Dream for All to to tons of other down payment assistance programs that might work for you as well.
Beautiful. Thank you so much, Josh. So we will be after this event sharing a copy of the link for this video so that you can play it back and listen to it again, as well as information from our lending partners and some of our preferred lenders. So if you'd like to continue this conversation and have someone take a look at your financials to see if this is a program or any of the other down payment programs are good for you, you will be able to reach out to them directly. We'll also have a link with a brief questionnaire so that we can help you guys through the process if you guys would like to continue on with the journey and get assistance with any of our realtor partners that are currently on, as well as you can use your own lender. So if you have a lender that you're currently partnered with, you are more than welcome to use that one for that. We are here just to provide the resources and information to you. You get to select the real estate partner and lender that you'd like to work with. So some of you do have your realtor partners that are currently on the call that can assist you and guide you through to the next steps. So next, we're going to go ahead and hand it over to Denise Ogata with Tri-Counties Bank, and she's going to talk about program that they have there to offer as well.
Hey, everyone. Thank you for joining and getting a little bit of information on all this because it's a lot. Here at Tri-Counties, I'm a community loan officer here at Tri-Counties, and we offer the WISH program. And I will be honest, it is one of my favorites. It's a 4-for-1 program. So in the last allotment, which has expired, okay, all these down payment assistance, only so much funds is available. Once they run out, they're out. Okay, and then they either renew at a certain time or they don't. It just kind of depends upon the program. For the WISH program, which is through the Federal Homeland Bank of San Francisco, it's a 4-to-1 match. So what that means is if you come in with $1, you get $4 in WISH funds to a max of $32,000. This is for the last allotment. I'm not sure what April 1st, when it's coming out again, is going to be, but I'm going to go off of last allotment. So what that means is if you come in with $8,000, you get the full $32,000. You live in the house for 5 years and the $32,000 is fully forgiven. 20% per year is forgiven that you live in the house. But if you sell it or rent it, you have to pay back the remaining portion that's less than the 5 years. Um, it's a great program. I mean, most people in 5 years haven't even unpacked all the boxes that they moved in with, so it goes quick. We can use this program with CalFHA, FHA, conventional VA loans. Okay, so you'll have your first, so this helps with the down payment and closing costs. Tri-counties also, now for this one, there is income limits, and you have to be at 80% or less of the HUD income per household size. Okay, some of these down payment assistance, it's per just the borrower being on the loan. For Wish, it depends upon how many people are in the household, and it takes the total household income, whether they're on the loan or not. But don't count yourself out. Always get checked and see if you qualify, because if you don't qualify for this one, there might be other ones that we might be able to put you with. Tri-Counties also has what we call our special purpose loan, which you can get up to 3% of the loan amount, up to $7,500 to help with closing costs and prepaid. Now that's a grant. You don't have to pay back. Okay. But the borrower has to qualify, which for this one, it's 150% of the area median income. You don't have to be a first-time home buyer, but the borrower has to qualify and the property. So I always say, give us a call, let us check the property address. And the reason why I say that is, and it's happened to me, one side of the street can qualify and the other may not be in the census tract and be in a different census tract. So it's easiest to be safe than sorry and check the address. It takes 3 minutes, and at least we know for sure that you get both. We can stack these together. Okay, so like the CalFHA, we can do a CalFHA first, we can do the Dream for All, we can do the Wish, and the special purpose if you qualify for all of them. They all have different income limits, different criteria, but they can be layered. I've done as many as 5 different programs. It just depends upon when you're ready to buy, which programs are available at that time. If you try and time it, that can get you in trouble. But timing it and seeing what programs are available when you're ready to buy, then we can see which programs are available, because there are a lot of different down payment assistance programs with different guidelines. I think that's it.
Awesome. Thank you all for your presentation and information that you have been providing. Thank you so much, Denise. Thank you so much, Josh, and thank you so much, Natasha. It looks like we have just a few minutes left. So if there any other questions that we haven't answered in the chat?
Yes, I actually would like to answer a question that I saw come up a few times. Um, Folks wanted to know about the first generation definition. They had a question on whether or not if they qualify because their parents bought a home in 2008 and the parents couldn't afford the home, so they either sold it or lost it due to a foreclosure. As long as the parents do not own a home today, that's both mother and father. As long as both your biological father and your biological mother do not own a home today, you are first generation, as long as you haven't owned a home in the last 7 years. Um, and I think there was another question about birth certificate. Maybe your birth certificate is from another country. CalHFA will take a birth certificate that's in another language. You don't have to translate it, so keep that in mind. And we will take other documents. Let's say you can't locate your birth certificate. If we will take a passport application, but that passport application should identify who your parents are on it. Adoption papers, baptism forms, school records, health records, or birth certificate. And honestly, guys, you only need the birth certificate if you don't have any information on your parents. I'm just saying I'm a just in caser. So after the audit is conducted, they might reach out to you to provide your birth certificate if, say, for instance, you have a parent that has a similar name to someone else out in the world and that other person owns property. That birth certificate, your birth certificate, not your parents' birth certificate, the first generation home buyer's birth certificate will prove who the parents are. So hopefully that helps.
Yes, I think that helps a lot. Thank you so much for that. Are there any other questions that you guys may have before we end this event? And then again,
I have a question.
sure, go ahead.
On the Tri-County part, is there a type of credit score that they have to go by?
Fannie and Freddie have taken away the credit score. So it's an overall of how your whole file looks.
Oh,
Uh,
okay.
I'll be honest. I mean, I just did one and it was because it just occurred and their credit score was below 600.
Okay.
Okay,
Um,
so it kind of depends upon the whole overall credit of what it is and the whole file.
okay. I also have another one on the regards of buying when you like don't go and buy a car, but what if you already purchase a car?
What
Uh,
the A car payment, what it does is it hurts your debt to income ratio. Okay,
Yeah.
because
Yeah.
car payments they're not cheap anymore, right?
Right. Right.
And so it takes up a lot of what you can qualify for. We have to go off of debt to income ratios. Okay, so you're looking at, depending upon the program, 45, maybe 50% of your gross income. Odds are you're not going to be comfortable with 50% of your income going to your debts and housing because you get taxes taken out, right? And we're going off of the gross. So a lot of times that car payment will eat up a lot of what you can qualify for. But you can probably, you might still be able to qualify, maybe just not as high as you thought you could. So talking to a lender, you're going to get to see where you qualify for first.
Thank you.
Go ahead. Okay. I think that might be all the questions we have. I did see another question pop up in the chat in regards to, does the debt to income ratio include rent or the amount of potential mortgage? And Josh did answer your future mortgage. Okay, beautiful. Well, I think we got all our questions answered. Again, we'll follow up this event with the link of email, which with the link to the video, and we'll also be sure to add your question and answers. That way you can refresh your memory on any of those in case you missed that. So thank you all for joining us today. We are greatly appreciate you. Chaplain Mitch, are you still on the call? Okay, well, let's go ahead and end this event. Thank you all for joining us today. I hope we were able to provide you guys with some great insight and information. And we'd love to be able to have you join us for a future meeting. We will be continuing to do homebuyer workshops, and we actually will be have it on calendar to have a HUD certification workshop so that you can get that certificate that you need to be able to qualify for the Dream for All program as well as other down payment assistance program. And our goal is to cover the costs that you normally would incur to save you guys a little bit of more funds and keeping that into your pocket and getting you where you need to be. So thank you guys all for joining us today. Again, Natasha, thank you so much for sharing about the Dream for All program and giving us a little bit more insight on that. We appreciate you.
Thank you.
You guys have,
Thank you.
you guys all have a great night.
Good night.
Good night.
Yeah.